How's it going, everyone? It's Sam. I am very excited to talk to you today about GNUS Brands International, also known as ticker GNUS. And I'm going to talk about some other stocks that some of you guys have been wanting me to talk about and take a look at. And I'm just going to do a very brief look at them just because I don't have enough time to go through all the different companies that you send my way. But if you like this kind of thing, you can let me know and I will do a full video dedicated just to the stocks that you guys are asking me about. I'll just rattle them off, maybe about 30 seconds to a minute on each stock. And just know that I'm not a financial advisor. And on some of these other stocks, I won't have taken that deep a look just because they aren't the kinds of companies that I am very interested in. Maybe I would be interested if I took a deeper look, but I like to go after companies that I really understand and I see out in everyday life. So if you send me something that I've never heard of, I'm probably not going to be super excited to invest in it right away. So let me know in the comments below if you want me to do this again. I will make a video maybe with 10 different stocks that you guys talk about. And if you want to put in the comments any other companies that you might want me to just briefly look over, do that too. And then maybe in the next video, if I do a rundown of 10 or 20 stocks real quick, maybe you guys can pick one that you really want me to go in depth on. So I appreciate it, but let's get right into GNUS. So GNUS Brands International is a company that is grown a lot over the last couple weeks, and a lot of people have been talking about it. I know a lot of people on YouTube have been talking about it, and it's a huge speculation play. So you can kind of tell that just with their chart. So they were 23 cents for a while there at the beginning of April, and they went up super significantly. They went up over 3,300%, and they got up to $8 from 23 cents, and now they're dipping back down. So they are a kids entertainment company based out of California, and they went up recently because of their announcement that they would be launching their own streaming network channel called Cartoon Channel later this June. So they have a couple television shows right now. One is on Nick Jr. and it's called Rainbow Rangers, and then they also have Stan Lee's Superhero Kindergarten, and they have a couple other things too. But just looking at the stock, I always get a little bit cautious when something jumps up that significantly. I mean, it was a penny stock. It wasn't like maybe they were a $50 stock or something and then they go up to 1,000 or something. It's not a 20x return. They're 26 cents. And I realize that the price doesn't really matter, but it's something to be cautious of because you don't see any companies that are real solid, strong companies at 26 cents. The fluctuations are 4% then if they move up a cent or down a cent. So that's something that just stood out to me right away. Their volume was super heavy today, 80 million shares right there, and it's a $630 million market cap. So $630 million, and it was just 23 cents a share. So that is kind of crazy just to think there that it was so much smaller before when it was just 30 cents or 25 cents a share. Now it's over 20 times that. So think about what their market cap was before. If we look at their financials, which I think is always important, especially if you're going to invest in a company, they aren't great. So I took a look at them before, but they are very weak. And when you look at their revenue, in 2019, it was 900,000. So this is in millions. This isn't in billions like some companies. 900,000, 5.3 million, 1 million, 5.9 million. So it fluctuates significantly there. But as you can see here, the gross profit, it was fluctuating a lot too. If we go down to their net income, negative 3.5 million, negative 6.2 million, negative 4.9 million, negative 9 million, negative 11.5 million. And I looked it up. They've lost money since 2010. I would not personally invest in a company that has lost money that long. I think Tesla was probably right around then, but I have such a great vision for Tesla, and they're at such a different scale. This company is very speculative, and if we look at their balance sheet, it's not great either. So hopefully in a company like this, if there's not going to be that much revenue coming in, hopefully they have a really strong balance sheet and they can, weather the storm really well. But their total cash and investments is 2.8 million. Total receivable 6.9 million. Let's look at their total current liabilities, and it's 19 million. So that is pretty scary right there. So between their short-term assets and investments and their receivables and their liabilities, they are about 1 to 2 in those categories. So 2 times the amount of liabilities as they have assets, short-term assets. And if we go down to just their book value, so their book value per share, 15 cents. Look at some other companies. Look at the tanker companies that have book values well above their share price. Look at some other companies that have that too. A lot of banks have that. Look at this book value. It's just sad. So they have a very low book value. When you look at that, it makes me nervous too, because you're not buying it at a discount. You're buying it because of pure speculation that is going to do well because of this thing coming out. Now, something else to be worried about is I was reading this article about how it'll be a $1.50 stock within a month. If you go down here, they recently raised financing. So they had 3 rounds of financing from May 7 to May 12, and those sold for anywhere between about 35 cents and $1.20. So that is so much less than what they are selling for now. The company didn't even see this coming, that it would grow this much. So personally, if the company doesn't have a good outward look on themselves, I wouldn't be investing in them heavily. So I know a lot of people have looked at NAT versus something like GNUS and thinking that they're both huge growth stocks and that they're in the same category. Well, NAT has massive earnings already. GNUS is expected to have massive earnings, but we don't really know what's going to happen, right? And NAT has been proven, they pay out dividends. They only went up 300% instead of 3,000%. And they have a good book value. So go sell off your ships to other carriers, I guess, and you still get some of your money back. You basically get nothing back if they go and want to dissolve the company. So that is a look at GNUS. So let me know what you guys think below. But next we're going to look at 3 other companies that you guys sent me to take a look at. I'm just going to do a quick little bit on each of them. So this is the first comment from Joshua. Go bro, thank you. Keep up with Tesla and Planet 13 maybe, with a little emoji. So shout out to Logan Fisher, because he does that all the time too, another YouTube friend of mine. Go check him out on some of his videos, because I know he's making 1 video every day of the week. But let's take a look at Planet 13. They are a company that is in the Mary Jane space, let's say that. So they do high-end Mary Jane selling. You can go into their shops and they kind of wine and dine you. You can try stuff out, as I understand. I know they have some locations in Vegas. I'm sure that they have locations other places. The reason that this probably came up was I did a video about Jeremy from Financial Education. He had a big investment video in Planet 13 and he talked about it, and then the next day it went up 25%. So you can see that here actually it was $1.25 and then went to $1.60 the next day. So with something like this, I think it has really good growth. As you can see here, the revenue increased 3-fold from last year. However, with everything going on in the economy right now, I don't know how I feel about this going this year. This is something that I could see myself really investing in maybe in a year or 2. I'm okay with losing out on some of that early profit, because as an investor, some of you might not feel this way, but I'm great with a 15% return year over year. I'm not someone that's going to sell in and out of stocks every week or something like that. I'm not looking to make 100% in a year. Of course, that would be great, but I think you assume a lot of risk when you do that. So with something like this, if they are something in a year that I see as a really solid money maker, I think that I could invest in it. So that's just kind of how I feel about that one. So next comment here from Mr. G Funky. What do you think about stocks like Smith and Wesson or Rugger? With civil unrest and the election coming up, we may see a spike in sales in the good old USA. So I don't know if I can say the G word on here, but if I can't, then I will bleep it out. But with everything going on in the economy right now, with a company like Smith and Wesson, and I think they're actually owned by another company. I looked this up. I think that they could be a good play, right? So with everyone buying, it could be a good play. So let's take a look at Smith & Wesson Brands, also known as American Outdoor Brands. With something like this, I think that could be a really good play. And again, don't take what I say and not invest or invest in a stock because of what I'm saying. I could be completely wrong. I am just telling you what I'm comfortable with and what I'm thinking. If someone were to ask me this in person, why aren't you investing in this stock? Well, this is why. Or why would you invest in this stock? This is why. So total revenue, 2017 they were at 900 million. Now they are at about 623 million. I think that they could do well in the future, but look at their net income. It went from 127 million down to 20 million, down to 18 million, and trailing 12 months, 8 million. So that is something that worries me a little bit. That's one of the reasons that I wouldn't invest in something like this. Of course, they could have great earnings, who knows? But that's just something that stands out to me, and that's probably enough. I don't imagine this going great places over the next 20 years. I don't think there's going to be a huge surge in firearms that are owned. So that's just something that I think about when I am looking at a stock like this. And then let's look at the last one. Ryan Lewis, one of my longtime subscribers, he says, SPG dividend, take a look, folks. SPG is something that I wish I had invested in. And this isn't one of those things where I'm saying I wish I invested because it went up 50% over the last couple weeks. They are Simon Property Groups. They own a lot of the malls here in America. And I wish I had invested more just in real estate in general, in different REITs during this time. But I had so much risk, I felt like, between the airlines, the cruise lines, the REITs that I owned, and all the other companies too, that when it was dipping, I was buying some of these companies, not Simon Property specifically, but other REITs that have done really well. And I can only take on so much risk. I didn't know if it was going to continue to drop in price, so I was going to buy more as it kept falling. So just like everything, you do your best. And there was a company that I just didn't think was going to come back this strongly, this quickly. They still have a really high dividend yield, but just like compared to NRZ, which is another company that I was buying around that time, they have done really well too. I mean, they were down to $3.43. I think I bought them at $3.60 or $3.80. It was like that same day. And they're up 150% too. So, I mean, you can't win them all, but they're a company that I wish I had gotten into also. So I appreciate it, guys. Again, please hit the like button, hit the subscribe button, and let me know in the comments below what kinds of companies do you want me to look at, and do you like this format just in general? Thanks, guys. I appreciate it, and I will see you in the next video.